Alright traders, buckle up. April 18th just gave us some real fireworks across the markets. From wild moves in tech to a surprise twist from the Fed, here's everything you need to know before tomorrow's bell. Let's start with the big three: S&P 500, Nasdaq, and Dow Jones. The S&P 500 dropped about 0.85% today, closing just above the 5,000 level, a key psychological floor. The selling pressure picked up late in the session, led by a pullback in mega-cap tech. The Nasdaq was hit even harder, down 1.2%, as yields spiked and traders rotated out of high-growth names. Semis took a big hit. NVIDIA, and AMD both slid over 3%, dragging the entire index lower. Meanwhile, the Dow Jones held up relatively better, down just 0.5%, thanks to gains in United Health, UNH, and Johnson & Johnson, JNJ, which acted as defensive ballast. Let's talk movers. On the upside, Netflix NFLX rallied nearly 5% after blowing past subscriber growth estimates in its Q1 earnings. The company added over 9 million new subs, and traders are loving the stronger ad-tier engagement. On the flip side, Tesla TSLA dropped over 4%, continuing its April slump after a bearish note from Goldman, cutting delivery estimates ahead of next week's earnings. Now, here's the kicker. Fed Governor Waller spoke midday, saying inflation progress is stalling and rate cuts are off the table until Q4 at the earliest. That comment sent Treasury yields surging, with the 10-year pushing back toward 4.7%, and that pressure spilled right into equities. Also, initial jobless claims came in at 212,000, slightly better than expected, suggesting the labor market's still tight. Alright, for my chart watchers out there, let's get into some technical levels. The S&P 500 is now testing its 50-day moving average. If we break below 4980, look out for 4,925 as the next key support. Resistance is up at 5,100. And bulls need a strong catalyst to reclaim that zone. Nasdaq 100 is flirting with its 100-day MA. That's a big warning flag, especially with semis breaking trend. Now, sectors. Energy was the only one flashing green today, thanks to a rebound in crude. XLE was up 0.7%, with names like Chevron catching bids after Middle East tensions popped oil above $87 a barrel. On the losing side, tech and consumer discretionary got hammered. But here's what stood out to me: unusual volume in regional banks. Fifth Third, FITB, and PNC saw volume spike over 2x average. Could be positioning ahead of next week's earnings or something under the surface. Keep those names on watch. So what's the game plan heading into Friday? Honestly, I'm cautious. With the Fed turning hawkish again and inflation data still hot, I'm not chasing pops. We're in a sell-the-rip environment right now. That said, volatility creates opportunity. If the S&P can hold that 4,980 zone, I'll be watching for bounce plays and oversold leaders, think Google or Meta, especially after next week's earnings. Also, keep an eye on earnings season rotation. We're moving from banks into big tech. The next few sessions will set the tone for May. And one last thing, don't ignore the bond market. If yields keep climbing, it's gonna be tough for growth stocks to catch a bid. Alright team, that's the wrap for today's recap. If you found this useful, drop a like, hit that subscribe button, and let me know in the comments what stocks you're watching tomorrow. Are you buying this dip, or waiting for more downside? I'll be back first thing tomorrow morning with a pre-market game plan. Until then, trade smart and protect that capital.